Hello, Sat Stackers. As usual, I am Chris, and I'm coming to you from Florida's glorious Space Coast. For all the lamenting on Bitcoin Twitter about how boring this cycle has been, this week has been chock full of FUD and hopium, rockets and conspiracy theories, and even a little monkey Shakespeare. So sit back, relax, and welcome to the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 208 of the Bitcoin Bulletin Podcast. It has been another glorious week here on Florida's Space Coast, and we certainly kept the space in Space Coast with multiple rocket launches and landings, and of course the splashdown of the two astronauts who had been left quote-unquote stranded on the International Space Station for almost a year. That occurred on the opposite coast of Florida, but the whole endeavor, including their failed original mission, as well as the quote-unquote rescue mission, did launch from right here. It is also spring break, which means we are jam-packed with tourists and college students seeking out a little sunshine and a little bit of beach time. Naturally, there has also been a lot of Bitcoin news, even if some of it was overshadowed by the anticipation and the release of the JFK assassination files, which were finally released yesterday. You know, it has often been lore that President John F. Kennedy planned on ending the Federal Reserve. You know, we know that he was anti-CIA and that he was worried about the military-industrial complex, but really the overarching theme of John F. Kennedy's presidency was that, you know, the whole ask not what your country can do for you, but what you can do for your country. And you know, he was probably what I would consider the last patriotic Democrat president. We certainly wouldn't have called Jimmy Carter overtly patriotic, and Bill Clinton, well, he flat out had written about how he loathed the military, and of course, his wife Hillary Rodham Clinton had written her college dissertation on rules for radicals, Saul Alinsky's theory on how to disrupt and bring down capitalism and remake the United States, and then Barack Obama flat out made fundamentally changing this country, his campaign promise. So John F. Kennedy was the last of the old school Democrats. He was pro-coal miner, pro-military, pro-union worker, and pro-cutting taxes. And he's often credited with being anti-Federal Reserve. And that isn't exactly true. And I wanted to, with all the news about John F. Kennedy and the assassination and the remainder of the 80,000 pages of files that were just released yesterday, I wanted to clarify his stance on the Federal Reserve. Usually when people talk about JFK wanting to end the Fed, they're referencing his executive order 100 or 11,110, which he issued in June of 1963, just months before the assassination. And this executive order basically amended a previous executive order from 1951 by delegating the Secretary of Treasury as the president's authority to issue silver certificates, which had been previously issued previously authorized by the president to issue. Anyway, his order allowed the Secretary of Treasury to issue these silver certificates, and that wasn't a big change. Basically, it was a plan of his transition to where the silver certificates wouldn't be issued at all, basically, and that we would transition fully to the Federal Reserve notes. At the time, of course, Federal Reserve notes were backed by gold, so maybe there is that, but certainly no intent to eliminate the Federal Reserve. Okay, we do have a lot of Bitcoin news to talk about today, but before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we were sitting at a block height of 888,548. 888 is kind of a special number to me. I'm a number kind of guy, and without getting into the details, it's just a number that always brings a smile to my face. Bitcoin is currently ringing in at a US dollar value of 87,220 US dollars, up almost 4,000 US dollars since last DCA Wednesday. But have no fear, we will still be able to stack more than 1,000 sats per dollar. Currently, every dollar that you convert into Bitcoin will score you 1,147 Satoshis. And that's just a psychological number for me. It's obviously we got a lot more than 1,000 sats per dollar when Bitcoin was lower before we started rallying towards all-time highs. But once we breach 100,000 US dollars, that means you're going to be getting fewer than 1,000 sats per dollar. And to me, I often talk about magic numbers in human psychology. And to me, that's a magic number. Maybe not a magic normie number, but a magic number for sat stackers where, oh my goodness, we're getting less than 1,000 sats per dollar. Shit's getting real, as they say. Bitcoin's current price means its market cap has been boosted back up to 1.73 trillion US dollars, still below the $2 trillion mark that we'd only really seen breached, 2 or 3 times, at least when you zoom out on a DCA Wednesday perspective. I think we first breached the $2 trillion mark back in December. Looks like that was on December 11th. Again, as far as on Wednesday is concerned, because we go over the data every Wednesday, kind of an enforced zoom out period. And then we slipped back below 2 trillion until the end of January. And there were 2 DCA Wednesdays in January on the 22nd and the 29th, where Bitcoin was over 2 trillion. But of course, other than those 3 Wednesdays, Bitcoin has been under that $2 trillion mark, another magic number, and certainly a magic normie number. And we will, mark my words, get above that $1 trillion market cap again soon, sooner rather than later anyway. It's inevitable as Bitcoin continues to demonetize literally everything else. And speaking of what Bitcoin demonetizes, for those of you who continue to value your wealth in gold, it will now cost you 28.4 ounces of gold to purchase just 1 Bitcoin. Of course, gold has been setting record highs. And I spoke, I think on the last DCA Wednesday, or maybe the podcast before that, or multiple times really, about how gold is a commodity. Yes, it's a monetary metal, but it's also a commodity. That's what people talk about when they say that, gold has intrinsic value. Of course, gold doesn't have $3,000 an ounce intrinsic value. Nobody's going to pay $3,000 an ounce, or they have to now because of its monetary value. But normally you wouldn't pay $3,000 an ounce just for a really good conductor that doesn't corrode. But because gold is a commodity, just like everything else, just like sheets of plywood, just like cars, just like houses, as the value of the US dollar has plummeted, it means it's going to take more US dollars to purchase gold. So despite the fact that gold is still setting all-time highs, if you look at it from a commodity perspective, gold's actually underperformed things like eggs, things like blueberries or blackberries that we spoke about last DCA Wednesday. Now, I'm not saying gold has not served as a really rock solid, no pun intended, store of value for thousands of years. That it has. Because prior to the discovery of Bitcoin, gold was pretty much one of the scarcest assets ever discovered by mankind. And so it was logical that we would assign value to one of those scarce assets, especially since it was really pretty and people like wearing it as jewelry. Although, there's a couple treasure museums in Florida, because you had the famous Spanish fleet shipwrecks. They made movies about them, like the movie Fool's Gold is about, the Spanish treasure fleet that wrecked. It actually wrecked off the coast of Florida, just a few miles south of here at Sebastian Inlet. I know this because they know where the ships are. In the movie, it was a big mystery. They ended up looking for like the flagship in the Bahamas or whatever, but that's Hollywood. In reality, it wrecked off the coast of Sebastian Inlet between Melbourne Beach and Vero Beach, Florida, maybe 40 miles south of where I'm sitting right now speaking to you. And one of the things they talk about at that museum and at other treasure museums with all of this recovered Spanish gold is a lot of it is in jewelry form. And if you notice, they've got these big chains, and all of these chains have very uniform links. And they explained that the reason that wealthy people wore gold jewelry was because that was their money. They were just carrying the chain around like you would carry around your wallet. And whenever they needed to purchase something, they would break one of the uniform links off of their gold chain and use it to pay for whatever they were purchasing. So it isn't just that gold was shiny and yellow. Part of the reason that we have a tradition of wearing gold jewelry is it comes from the fact that it was rare and it was used as money for thousands of years. Of course, Satoshi Nakamoto discovered absolute digital scarcity when he invented Bitcoin. And one of the reasons we refer to Bitcoin as digital gold is because it took all the properties of gold and improved upon it, as opposed to gold being heavy, hard to move around, hard to divide, actually hard to verify. People think it's super easy to verify that gold is authentic, but there are very clever ways to make counterfeit gold bars, counterfeit gold coins, as we've seen recently with large international banks getting caught holding worthless tungsten bars just covered in gold. But I digress. Michael Saylor had something to say about this yesterday when he tweeted. Actually, it was this is a Michael Saylor fan account at Saylor buys BTC. Gold has now eclipsed $3,000, parentheses, over 20 trillion market cap. When Bitcoin hits over 20 trillion market cap, Bitcoin will be over $1 million US. Do not sell your Bitcoin. So we know that gold has been demonetized, increasingly so, by Bitcoin. You still have the legacy investors, the boomers, even older than the boomers, the Warren Buffetts. He's certainly much older than a boomer. That you don't. The saying is, you can't teach an old dog new tricks, and they're very comfortable in their ways. They've been doing this for 80 or 90 years, and they really don't have any incentive to change. And when you don't have an incentive to change, it's kind of hard to see. It's like how the youngest person in the family is always the one that was in the day hooking up VCRs or Ataris, or showing the family how to use their first PC, or how to use their iPhone or their iPad, and now, of course, how to use Bitcoin. So gold will continue to trend to zero in Bitcoin terms as the old generation passes on, and as more and more people are exposed to Bitcoin, and as more and more fiat currencies are exposed for the scams, for the thefts, for the outright slavery systems that they are. But in the meantime, you still have the opportunity to purchase an entire Bitcoin for a mere 28.4 ounces of gold, and it will not be long. We've already seen where it has taken pounds of gold to purchase Bitcoin. Right now, we're slightly under 2 pounds of gold to purchase just one Bitcoin. But when this bull market resumes, we're going to leave 28.4 ounces of gold in the dust. Even if inflation continues to increase the fiat price of gold, it will trend to zero. It will continue to trend to zero in Bitcoin terms, and it will take more and more ounces, eventually more and more pounds of gold to purchase just one Bitcoin. And I'm not a hater of gold. Gold certainly has its purposes. I certainly have owned gold in the past before Bitcoin. I mean, I stacked a little bit of gold, in the 1990s when I was first learning how to invest. And I was a firm believer. I was leaning towards gold bug at the time myself, but I'm also a realist, and I'm not really the tech guy in the family anymore. There are younger members of the family who are kind of assuming that role. But for the boomers in my family, the boomers and older in my family that have always looked at me as the tech guy, I'm still kind of the tech guy. All right. For those of you who continue to value your wealth in more important things than gold, things that you can survive on, one Bitcoin will currently purchase you 4,878 large pepperoni pizzas from Papa John's. That is an increase of more than 200 pepperoni pizzas from just last DCA Wednesday. That is a pizza every day for more than 3 years now, as even pizza trends to zero in Bitcoin terms. And of course, that metric that has been my favorite metric to talk about, or at least to observe for the entire history of this podcast, Bitcoin's 24-hour average transaction rate is absolutely humming. Last week, we saw a spike from 3.64 transactions per second to 5.06 transactions per second, as it looked like Bitcoin was bottoming and maybe starting to recover. And today, as the Bitcoin price is up several grand just today, we're looking at a 24-hour on-chain average rate of 5.12 transactions per second. Again, that isn't any kind of transaction analysis, but it is interesting to note that for the last almost 4 years that we've been doing this podcast, anytime the on-chain transaction rate has just really been humming, the price of Bitcoin is pumping. So it's fun to look at, if nothing else, even if, as they say, correlation doesn't equal causation. But speaking of on-chain activity, Bitcoin's mempool is, well, it's just a little fuller than last DCA Wednesday. Last DCA Wednesday, with that increase of about 2 transactions per second average over the previous Wednesday, we saw mempools bump up from about 9,500 to 16,000. And this week, Clark Moody's dashboard is showing 17,006 transactions in their mempool, about 600 transactions more than last Wednesday. And for the first time that I can remember, mempool.space is actually showing fewer transactions in their mempool, all just, less than 100 fewer transactions, with 16,941 transactions pending in their mempool. Of course, it's been a few minutes since the last block. It's been more than that 10-minute average that we aim for. So some of that could just be that transactions have been starting to stack up as we're waiting for the next block. Along those lines, if you need to send an on-chain transaction and it's a high priority, mempool.space is recommending that you include a fee of 4 sats per vbyte as your mining fee with that transaction. That is double last week when the high priority transaction was recommending a 2 sat per vbyte fee. Of course, mempool.space is telling us slightly different numbers, saying that they recommend that you include a fee of 5 sats per vbyte for a high priority transaction. And, with the almost doubling of the fee and the increase in Bitcoin's US dollar value, that works out to a fee of 61 cents in US dollar terms, which actually is not too shabby at all for a high priority transaction where you could move a theoretically unlimited amount of value anywhere in the world without permission, without relying on a trusted third party, and that can never be censored or clawed back or rolled back, as in the case of Ethereum, when they rolled back the Ethereum blockchain after the DAO hack. Mempool.space is saying that if you have a medium priority transaction, you should include a fee of 4 sats per vbyte. A low priority transaction should include a fee of 3 sats per vbyte, and a 2 sat per vbyte transaction fee will be sufficient for a very low or no priority transaction that you don't mind taking up for a week, possibly before it's mined. Some of this, I would hazard a guess, is a little inflated because, as I mentioned, it's been quite a few minutes since the last block came in. Looks like 21 minutes since the last block came in. So more than double the average time. Of course, as I say often, the block time goal is an average of 1 block every 10 minutes. And that's why the protocol takes 2016 blocks, which at 10 minutes a block would work out to about 2 weeks, and averages that because last night, for example, I saw 3 blocks all come in less than a minute. And then, of course, we've seen blocks come in that took more than an hour. So you take that average of 2016 blocks, and if it is not exactly 10 seconds between blocks, then you get a difficulty adjustment in the mining difficulty that it takes to mine the next block of Bitcoin. Of course, if the blocks are coming in too fast, it gets a little more difficult to mine Bitcoin. That has been usually the case throughout most of Bitcoin's history, because as the Bitcoin network grows, as adoption grows, more people have gotten to mining. Mining has gotten more complicated, going from laptops to GPU rigs to ASICs to incredibly powerful ASICs to huge mining farms, tapping entire power plants worth of energy. But when the blocks are coming in faster than 10 minutes, the difficulty that it takes to mine the next block is notched up a little bit. And of course, if they're coming in too slow, the difficulty is relaxed a little bit. We're currently 508 blocks away from the next mining difficulty adjustment, and that is about 3.5 days worth of blocks. And depending where you get your data, it's going to be another increase of anywhere from 1.2% to 1.9%. Still a fairly modest increase in difficulty, but an increase nonetheless as hash power continues to pour onto the network. Currently, it is estimated that there are 794.7 exahash securing the Bitcoin network, up about 5.3 exahash from last DCA Wednesday. So again, if you zoom out, just like the Bitcoin price, there have been times when, the difficulty to mine Bitcoin has gone down because hash rate has come off the network for various reasons. Last halving cycle, part of the reason, in my humble opinion, we saw the double top with the big dip in the summer of 2021 was because, we had the China miner ban where China said it was illegal to mine Bitcoin. And we saw 30% of the network hash rate temporarily drop off as they had to either relocate to other countries where mining was legal or go underground and mine a little more cautiously. Obviously, all that hash rate came back online. We've also seen brief periods where miners have to turn off because there's high demand for electricity. And in places like Texas, miners have agreements with the mining grid to where when that electricity is really, really needed to prevent rolling blackouts or rolling brownouts, they agree to turn off their miners. And of course, they're compensated for that. And that can happen when it's either really, really cold or really, really hot, or when the wind's not blowing and a lot of that power is coming from windmills, various reasons. But in general, we have seen a steady up and to the right increase in hash power securing the network and a corresponding increase in difficulty to mine Bitcoin. Currently, blocks have been averaging 9 minutes and 52 seconds. So that's why we're looking at a modest difficulty increase. Obviously, that's slightly faster than 10 minutes. Again, this isn't super important other than the fact that it's what guarantees the security of Bitcoin, the unhackability, the immutability of Bitcoin, the inability of a malicious actor to roll back or rewrite the blockchain is all that computing power that it would take to do so. But if you're a miner, if you're a commercial miner or work for a commercial miner or own stock in a commercial mining company, or maybe you have an Antminer S9 or S21 mining away in your garage, keeping your house warm in the winter, your Bitcoin mining looks like it's going to get about 1 to just a little less than 2% less profitable next week. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction, where you can let us know what you think about the podcast, let us know something that's going on in your life or in your community, or even just say hi. You can say whatever you want, but because it is a Lightning transaction, you are sending value back to the podcast in the form of Satoshis. You get to choose that amount. You pick an amount that corresponds to the value you feel that you're getting by listening to this podcast, and you can contribute it back. And when you do send a boost, we read that boost on the next episode of the Bitcoin Bulletin Podcast. Speaking of our listeners, we've had a little bit of a change in our geographic distribution of listeners. It's the first change since last December. We had a couple of changes last fall. For example, if you remember, Singapore wasn't even in the top 10, and they surged into the top 10, rising all the way to the number 2 spot where they stand today. We've seen a little bit of a change today as well, not with Singapore, but we'll get to that in just a minute. The top 10 countries where our listeners are located right now are as follows. Number 1 remains the United States, where about half of you are listening. So hello to my fellow Americans. Welcome to the Bitcoin Bulletin Podcast if this is your first time listening, and thank you and welcome back if you've been a long-time listener. Number 2, as I mentioned, remains Singapore. So apa kabar, thank you very much to those of you listening in Singapore. Number 3 has remained Germany for quite a long time. So Dankeschön, mein Freunds in Deutschland. Number 4 has equally for a long time remained Argentina. So hola, muchas gracias amigos in Argentina. Number 5 remains Luxembourg. So again, Dankeschön, mein Freunds in Luxembourg, or Morgen to those of you speaking Luxembourgish. Number 6 remains Canada, where some of you might be heating your homes or your garages with those Antminers because it's still pretty cold up there in most spots. Number 7 remains our cousins across the pond in the United Kingdom. I think I forgot to say thank you to those of you in the frozen white north listening in Canada. So thank you. Number 7 remains our cousins across the pond in the United Kingdom. So thank you to all of you listening in the UK. Now, this is where we get our first change. Australia has moved up to the number 8 spot. So hello and thank you to all of you listening down under in Australia. It's really cool that you're listening in numbers where you bumped up to the number 8 spot in our top 10 countries of listenership. Number 9 now is Spain, falling 1 spot to number 9, but still in the top 10 where they've been for most of the history of this podcast. In the top 10, that is, not number 9. So hola, muchas gracias, amigos in Spain. Maybe you can get 1 or 2 of your friends or family to tune in to the next episode or this episode and help bump your country back up to number 8. But in the meantime, thank you for listening. Number 10 remains Mexico. So hola, muchas gracias, amigos in Mexico. And we don't read the countries below the top 10, but we have many, many people all over the world listening. I can scroll through even to the fraction of like 0.1% of listenership. And when I do, I can see that we have listeners all over the world. That is sincerely humbling and sincerely flattering, because while I like to talk and while I like to talk about Bitcoin, what makes it worth it every week, sitting down in front of this setup in my studio, in front of this microphone, staring at an array of computer screens and sitting here with headphones on, is knowing that there's plebs just like me all over the world and that you enjoy tuning in and listening as we explore dollar cost averaging on our DCA Wednesdays, or maybe just listening to me recap the Bitcoin stories of the week. So again, thank you to every one of you, regardless of where you're listening. From the bottom of my heart, you make this all worth it, and you are what makes Bitcoin so special. Bitcoin is about people. Without the people, Bitcoin is just software. It's just a protocol. It's just numbers. People are what turned Bitcoin into a language that use that protocol to change the world. All right, on to the news. There's been a lot of news this week. Some of the news stories larger and more impactful than others. Other stories seemed like they were the biggest news in the world when they were, breaking news, only to kind of fade into oblivion, as is often the case. But as of this afternoon, the biggest financial news was that the United States Federal Reserve Bank, which is neither federal nor has any reserves, had their meeting where they announced their interest rate decision, and Reuters ran the headline, "Trading Day, Markets Soar as Powell Brings Back Transitory." Of course, that leaves out the fact that they left rates unchanged. But the article says the Fed's decision to leave rates unchanged was widely expected. This left investors to take their cue from other aspects of what turned out to be a remarkable day that included significant changes in the economic forecasts, underlying shifts in the dot plot, Powell's resurrection of transitory to describe inflation, and the Fed saying it will slow the ongoing drawdown of its balance sheet. Now, that is the takeaway that I got from this. Slowing down the ongoing drawdown of its balance sheet. What does that mean? Well, the drawdown is what was known as quantitative tightening, QT. The Fed's selling assets instead of buying assets with their printed money. What does the end of QT mean? Well, it means that we're on the verge of QE. QE is money printer go burr, and we all know what happens when money printer go burr. Bloomberg summed up the meeting by saying in the headline, "Powell reassures on economy and beaten stock bulls jump back in." Of course, all of the major stock indexes in the United States closed up. The S&P 500 closed up more than 1%. The Dow closed up just under 1%. NASDAQ gained 1.4%. And of course, even gold was up by almost 0.5%, setting a new all-time high of $3,057.50 per ounce. Again, that's, as I said, gold is a commodity. Everything got more expensive today. Everything gets more expensive as inflation goes up. And that was part of the newscast today, was that the news conference today was that as the first headline I read, where Reuters said Powell brings back transitory, he said basically that he expected that Trump's tariffs, or his threat of tariffs, because they haven't even kicked in yet, they're going to kick in April, and that's if the other countries don't blink first, that's somehow responsible for the inflation that we're seeing right now, but that he expects that to be transitory, which I can't hear any chairman of the Federal Reserve or any secretary of the Treasury ever issue the word transitory ever again without a bit of a chuckle, because that was part of the clown world. There's no inflation. Inflation is transitory to inflation is good for you BS that we got out of the administration that we just recently kicked out of power. But I digress. Even currently villainized Tesla stock gained 4.68% today. And of course, MicroStrategy outperformed all of them, regaining 7.43%, along with the price of Bitcoin rebounding. And that brings us into Bitcoin's price. A lot of people have been lamenting the performance of this bull market, and they're looking at charts like Econometrics chart, where it charts the trajectory of the previous halving cycles. And Econometrics released their latest chart yesterday, where they said Bitcoin's growth trajectory for this fourth halving cycle is now much below the historic range set by previous halving cycles. At this stage of the cycle, the lower bound of the historical range should be around $250,000. And then they, of course, have their chart, which they show Bitcoin performing poorly. I want to remind you that this time was very, very different in that normally on halving day, we're just a little above the cycle low. This time we crossed halving day at pretty much almost the all-time high, because Bitcoin set a new all-time high when the ETFs launched and eclipsed the $69,000 all-time high that it had set at the 2021 peak. And that had never happened before. So we crossed halving day more than 60,000 US dollars as opposed to crossing halving day around $15,000. So if you start the plot at $63,000, 4x the cycle low, of course it's going to look a lot different from the previous cycles where their chart all starts pretty much at the cycle low. Now, this bull run is starting to diverge a little bit from the 2016 cycle in terms of the chart from the cycle low. But if you look, and Glassnode allows you to run this chart, but if you look at that cycle, Bitcoin is hugging pretty much the curve, pretty much the chart of the 2016 halving cycle. I've said often that this really reminds me of 2017. Just in the last couple weeks, we've seen it start to dip below the line of the bull run, the gains in 2017, the beginning of 2017. But this is not the first time it's diverged from the chart. This isn't a perfect match. It has actually been above the average 3 significant times. And that is because, as I've said so many times, every cycle experiences 5 to 7 30% corrections. 2017 did, and this cycle will as well. So it should be noted that the price divergence on those 3 times was during pullbacks in the previous cycle. And this divergence where we're seeing a pullback just happens to correspond to after we had recovered from the most recent pullback in 2017. So we haven't broken the trend of rhyming with 2017 by any shape of the imagination. So remember, I say that every bull run has an average of 5 to 7 30% corrections. And quite frankly, quite honestly, technically, this isn't even one of those, because really this is the first correction of this bull run, the first major correction of this bull run. And of course, there will be others, but a 30% retracement from the all-time high of 109,300 US dollars would have required Bitcoin to fall below $76,500. And depending where you get your price data, the lowest we've seen so far was $76,584.63. So that's not quite 30%. Technically, we didn't even fall a full 30% in this retracement. And if we have bottomed already, that means we're performing better than the 2017 bull run, not worse. So, for everyone worried about the quote, "this cycle has already peaked," or "this bull run is already over," FUD, this has been nothing so far. Again, during the 2017 bull run, we had already seen 3 pullbacks, or we saw a total of 3 pullbacks that were 38%. Remember, we haven't even hit 30% in this pullback, but we saw multiple pullbacks, 3 of which were, 5 which were greater than 30%, 3 which were 38%. And I know history doesn't repeat, but it certainly does rhyme. At least it has thus far when it comes to Bitcoin cycles. So I say buckle up. This bull run is just getting started. In fact, the fun part won't even start until later this summer or even early fall. Of course, Perma Bull and Bitcoin whale Michael Saylor tweeted his optimism about this cycle's bull run on Saturday when he, again, this isn't Michael Saylor. This is Saylor Satire, a parody account where it says, "Bitcoin Golden Cross is here." I don't know why I tagged this as Michael Saylor. That's the second time I've done that on my show notes. But it's a good point nonetheless. Bitcoin Golden Cross is here. Every time this beast awakens, the market bends to its will. So it shows that in 2016, after the Golden Cross, we saw 139% gain. And then in 2017, after we saw the Golden Cross, we saw a 2,200% gain. And in 2020, after the Golden Cross, we saw a 1,190% gain. Last time people laughed, then they cried, then they FOMO'd. And mark my words, they're going to do so again. A long-standing FUD that dovetails with the diminishing returns FUD is that it is harder and harder for Bitcoin to have these huge price increases, at least in terms of percent, because as the dollar value of Bitcoin goes up, the number of US dollars it takes to have a 10% gain gets larger and larger. American HODL put this all into perspective with a tweet on the 14th of March. So just last week. And this is really American HODL. I didn't misfile this quote. It's American HODL 8, his current handle on Twitter or X. And he said, "People have a hard time with multi-million-dollar price predictions, but Bitcoin is an infinite container for wealth. there is no limit to the amount of monetary energy Bitcoin is capable of holding. In 250 years, Bitcoin might have a 1 sextillion market cap. There is no limit. And that gets to the point that Bitcoin is a provably scarce, definitively scarce, absolutely scarce, capped asset with a fixed supply of only 21 million Bitcoin. And that as the world grows, as there's more wealth, more of that wealth starts pouring into Bitcoin. Bitcoin starts to take over as that whole dollar milkshake where Bitcoin starts to suck the monetary wealth out of other currencies, other assets. Bitcoin begins to take over as we march toward hyper Bitcoinization. And there's no limit. There's really no limit. The only limit to how much one Bitcoin can be valued is the total wealth in existence in the world. And then as we become a multiplanetary species, if Elon Musk gets his way, in the universe, or at least in the solar system. But I digress. As a reminder of why you should be optimistic, Vijay Poyapati pointed out on Twitter about a week ago when he tweeted, "The greatest risk to Bitcoin that the US government will try to ban it has now been eliminated." So I've mentioned this before, when I have tried to orange pill normies, especially older normies, not necessarily boomers, but boomer-ish, and certainly those with a decent fiat wealth, certainly my wealthy friends, one of their standard, after they got past the it'll get hacked, and that was proven that it's obvious not going to happen because Bitcoin is 10 plus years old, 12 years old, 15 years old, 16 years old. The likelihood of it getting hacked started to look increasingly impossible, even to the naysayers. So they switched to, well, the governments are just going to ban it. They're just going to turn off the internet. And I would always counter that with, well, in order to turn off all the electricity, all the internet in the world, you're going to have bigger problems than Bitcoin. So, I don't think that's ever going to happen. But even if you do, I mean, that's kind of an apples and oranges scenario. If we really had the zombie apocalypse and it was so bad that there was no way to use Bitcoin, and friends, remember, you can use Bitcoin without the internet. You can even send a Bitcoin transaction by smoke signals if you had to, as long as someone somewhere is running a copy of the Bitcoin ledger. Bitcoin is still alive and they can still record transactions. But the point being, with the United States having a huge radical shift in power just in the last couple months, and with Donald Trump signing the executive order saying that the US government is not to sell us Bitcoin, establishing the strategic Bitcoin reserve, with the Operation Choke Point 2.0 coming to an end, and with the all branches of government becoming instantly overnight Bitcoin friendly, I think it's safe to say that the US government banning Bitcoin has been taken off the table. So that FUD is gone. And for that reason alone, that's infinite reason to be optimistic, because that was the thing that all the boomers I knew, all the Wall Street types, the traditionalists, the gold bugs even, would cling to was, that might be nice, but it might be nice right now, but when the government bans it, it's instantly worthless overnight. That's gone away. So some of those boomers, some of those gold bugs, some of those people who honestly believed that the government would not let Bitcoin exist, they have to be waking up and smelling the coffee now and noticing that, holy cow, that's not true anymore. So some of them are going to become orange pilled, even by themselves, when they open their eyes and they realize that they were wrong, and they were wrong in glorious fashion. Some of them will come to Bitcoin, and increasingly so. Bitcoin is the revolution at Schulze on X or Twitter tweeted just about a day ago now. "This is just the beginning of the best time of your life. No other humans have ever experienced anything like this." And I'm remiss because someone had a tweet that I even liked better, and I can't remember who it was, and I don't want to misattribute it, but it was basically the whole, born too late to be, an explorer, born too early to colonize Mars, born at the perfect time to be an early adopter of Bitcoin, or something along those lines. And that is certainly true. All right. The other quote unquote big news of the week, you probably heard about. If you haven't been listening to pretty much every podcast out there, because a lot of them, even ones that I think should know better, have been talking about this. Even Cedric Youngelman was pushing this on his most recent podcast. And that is, well, you've probably heard, I'm getting ahead of myself. You've probably heard of the adage that if you put enough monkeys in a room with enough typewriters and they just started banging away, given an infinite amount of time, eventually they would type the complete works of Shakespeare. This is known as the infinite monkey theorem. It's the idea that a monkey banging on a keyboard randomly, if given an infinite amount of time, would surely, statistically, eventually type any given text, every text actually, including the complete works of Shakespeare. And so it is with Bitcoin predictions, and we certainly have seen an infinite amount of monkeys banging out predictions. And this is going to be controversial, but it is, in my opinion, that Josh Mandel's prediction about Bitcoin closing at $84,000 on March 14th, 2025 was just that. He got lucky. For some reason, Bitcoiners love to have heroes. We saw this with Roger Ver, touted as Bitcoin Jesus. We saw this with Plan B, with people mortgaging their homes and going all in and on leverage because of his stock to flow prediction, believing every word that came out of his mouth. Now, if you remember, Plan B guessed the monthly close multiple months in a row with his stock to flow, which ultimately failed. And so far, Josh Mandel has just predicted that one price. So today we see that hero worship. That I think probably it's more hopium that causes this, because Bitcoiners, we're on average smarter than the average person, but rallying around Josh Mandel and his predictions, which he hasn't even explained how he did. I say all the time, nobody has a crystal ball. There is not black magic or a wealth of historical knowledge that can predict the price of Bitcoin at any given time. We can look at a trend. We can say that we know that history has said that every bull run we've had the halving, and then we've had a bull run with a new all-time high, and we can make educated guesses. But I can't tell you on any given day what the price is going to be. I can't tell you what this bull run's going to peak at. I can just guess, and I'm pretty sure that's what just what Josh Mandel did. So as I said, he hasn't even explained how he made this prediction, other than that he alluded to a mysterious memory from 30 years ago and cryptically hinting. We said LTCM, which most people take to mean the long-term capital management crisis and the subsequent bailout. I know this is dangerous ground. I was watching Jack Meller's podcast, his live questions or Mailbag Monday podcast on Monday, and I saw his fans turn on him in real time on Monday when he even briefly touched on this during his live podcast, basically starting to say what I just got into. And even Jack, he backed off because his Twitter chat his live chat was getting raucous and launching him into him for daring to question Josh Mandel. So we'll see. I mean, maybe there are UFOs, maybe there are aliens, maybe there's ghosts among us, and I'm just wrong. And maybe I'm wrong about Josh Mandel. But if I am, he can do it again. And he will do it again. And remember, Plan B did it multiple months in a row. So before I think that this is anything more than just a broken clock is right twice a day kind of scenario, he needs to explain his methodology, maybe present a model, and do it again, repeat it. And then maybe I'll put some credence into it, but I'm not going to hold my breath. In the bullish news, I guess yesterday now, BlackRock's head of digital assets, Robert Mitchnick, was interviewed on Yahoo Finance, and he had a really bullish perspective about Bitcoin. They asked him about Bitcoin's price stalling near 80,000, about the pullback, about the economy and tariffs and inflation. And during the interview, he said that some of the outflows that we've seen during this quote unquote retracement were not from hodlers or holders selling their Bitcoin, that what it actually was that there were hedge funds that had been engaging in the spot to futures arbitrage trade, and that has become increasingly less profitable. Initially, it was really profitable, especially with, Grayscale. The Bitcoin, there was that Grayscale arbitrage before their GBDC was converted to an ETF. Anyway, he says that what they're seeing is large hedge funds unwinding this arbitrage trade, that it wasn't retail, it wasn't even institutional sellers selling their holdings. It was just the unwinding of that trade. He emphasized that fundamentally, on a long-term basis, Bitcoin really should be uncorrelated or even inversely correlated with risk assets. But he said that there have been periods, obviously there have, when Bitcoin does have what he called these short-term correlation spikes. And he said that some of this correlation was he called it, quote unquote, a self-inflicted wound by, quote, some of the research and commentary that the industry does, leaning into the idea that it is a risk asset at times, which really doesn't make a lot of fundamental sense when you think about what Bitcoin is, unquote. But that in the long term, that won't be the case. And that is why people think of Bitcoin as digital gold, because it's the opposite of a risk asset. It has absolute scarcity, that in times of uncertainty, in times of inflation, in times of risk, that's when Bitcoin should shine. So he also added the Wall Street idea that tariffs will be bad for Bitcoin was, quote, equally silly, and that even a recession would actually be, quote, a big catalyst for Bitcoin. And of course it would be, because that's what Bitcoin was designed to counter. Speaking of catalysts for Bitcoin adoption, of course, EU President Christine Lagarde announced yesterday that the ECB, the European Central Bank, is now laying the groundwork for the launch of their digital euro, which is going to be rolled out this October. I want to take this moment to remind you, the 50% of you listening in the United States, that we dodged a bullet on this one, because had the election gone the other way, had we elected Kamala Harris as president and retained the current Secretary of Treasury, or worse yet, had Elizabeth Warren become Secretary of the Treasury, which was what most people think was going to happen that are in the know, the United States would be right behind the EU. We would be diving full on headlong into a CBDC, as opposed to when we saw Donald Trump speak at the Libertarian National Convention at the Bitcoin conference in Nashville, when he promised that under his watch there would never be a CBDC. Polar opposite of the direction that the United States was heading, and the direction that the EU and large swaths of the world appear to be heading, a direction towards censorship, restrictions on freedom of speech. We have the Bank Secrecy Act here, and all these ridiculous policies that are the exact opposite of secrecy, where every single financial transaction they can surveil is surveilled, but nothing like we would have if we had a digital currency controlled by the government, where they could not only see but control every transaction you made. They could prevent you from spending your digital currency on certain things, and they could make it expire or take it from you and penalize you if you maybe said the wrong thing, like the social credit scores in China. So we dodged a bullet. Of course, speaking of the other party that's no longer in power, not everybody is a fan of Bitcoin. Fiat Archive tweeted 2 days ago, new Democratic lawmaker Gerald Connolly is urging the U.S. Treasury to stop its Bitcoin reserve plans. Of course, they show a picture and he's a stereotypical boomer-looking old fogey, but with Bitcoin author and podcaster Boyd Cohen commenting in the comments, geez, Dems, get your heads out of your asses. As an independent, I find it ludicrous that so many of them have ceded Bitcoin to the Republicans. They will lose nearly every election going forward until they realize they are fighting a losing battle. I postulate that part of the reason the Democrats are opposing Bitcoin is surely the whole one side has to oppose everything the other proposes. So since the Republicans are currently pro-Bitcoin, they have to be anti-Bitcoin. However, it is important to remember that socialist policies are inherently incompatible with a Bitcoin standard. The whole basis of socialism is that you take money forcibly, involuntarily from the producers, and you redistribute it to those who have less. You cannot have a mandatory progressive tax and redistribution system with a money you can neither print nor confiscate. So the fact that leftists, socialists, communists in some cases, are against Bitcoin should be a no-brainer. You literally cannot live in a socialist country if you can't control the money. In fact, that's one of the pillars of communism, is that you have to have a central bank that has tight control over the currency. The exact opposite of Bitcoin. So one other thing that was floating around out there, this is kind of new, this surfaced this afternoon. I guess apparently there's some rumors that Donald Trump is going to make a big announcement tomorrow, and that announcement may have something to do with 0% capital gains on quote unquote all crypto trading and investing in the United States. That would be glorious. In my humble opinion, that would be one of the greatest things we could see to further Bitcoin adoption, because one of the ways that the government in the past has tried to hinder Bitcoin adoption is by making it a pain in the ass to use it. They never had to ban it. All they had to do was make it to where if you did buy a cup of coffee at Starbucks, you ran the risk of going afoul of the IRS if you didn't report it on your taxes and figure out what your cost basis was on that Bitcoin when you acquired it, what the fair market value was when you converted it into coffee, what the difference is, and then pay capital gains on that. And, that's a royal pain in the butt for small transactions, especially when you do dozens of those transactions every day, thousands of those transactions a year. They knew it was impractical, and that is one of the ways that they were trying to impede Bitcoin. So getting rid of that would be a huge deal here in the United States. In general, of course, Bitcoin doesn't care. It's going to do what it does regardless of how hard governments fight. It's just that it might take longer. Certainly, governments going from the then they fight you to then you win stage, that's kind of the suddenly and gradually then suddenly. And I'm not holding out hope that this will actually happen. Maybe Trump will announce that he's going to propose it and send a bill to Congress, but really, I don't think he actually has the power to do this. This would require, the House and the Senate to vote on it. They need 60% of the vote. The Republican Party does not have 60% of the House, and they have an even slimmer margin in the Senate. So the chances of this ever being enacted in law, unless the Republicans really make some big gains in 2 years in the midterm elections, I think that's chances of that getting passed into law are pretty slim. Would be cool, but pretty slim. And the chances of them having large midterm gains are statistically pretty slim because throughout most of the history of the United States, the party that has the presidency loses seats in the House and the Senate on the midterm elections. It's just the way it works. Usually when a president gets elected, he brings senators and congressmen into power on his coattails. And then midterm, when people are grumbling, because the first couple of years is when they do the unpopular things, get all the pain out of the way so you can enjoy the benefits when it's time for them to be reelected. So during the midterms, the senators and the congressmen that are up for reelection suffer. So I'm not going to hold my breath on that one, but it would be freaking fantastic if that happened. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 191st stack. We chose a small equal portion. I wanted to keep it simple. So we chose just 20 US dollars because I wanted to show that, regardless of what your financial situation is, if you can come up with just $20 a week, that you could build an appreciable stack of Bitcoin. And we chose our regular interval of weekly on Wednesdays. These are, of course, both you do you things. Obviously, Michael Saylor's not going to stack just $20 a week worth of Bitcoin, and $20 might be nothing to you, but plenty of the people listening, $20 is a lot of money. So choose an amount that is not an amount that you will be in big trouble if you lose, that you're comfortable taking and holding forever, not something you're going to need to buy food or pay the rent on anytime in the near future. An amount of money that you can afford to just make disappear for 4 years, 10 years, 20 years, what have you. And of course, that interval is up to you as well. Most people do their investing when they get paid. So if you get paid every other week, that's fine. You can DCA every other Friday or every other whenever. These are you do you things. But we chose Wednesday because, quite frankly, DCA Wednesday has a nice ring to it. And we chose $20 because we wanted to keep it simple. So far, we have stacked 190 Wednesdays, going all the way back to July 28th, 2021. Of course, back then, Bitcoin was between the two cycle highs in the spring of 2021 and then ultimately in the $69,000 all-time high in November of 2021. So we bought all the way up to that all-time high. Then we bought all the way down through that bear market, through that crab market, and then we were buying all the way back up again this cycle. So during those 190 Wednesdays, at just $20 a Wednesday, we stacked a total of 10,478,896 sats. We converted 3,800 US dollars into just a little over 0.1 Bitcoin, and we did so at an average purchase price of just $36,263.36. Obviously, significantly below the $80,000 Bitcoin range, the $100,000 Bitcoin range when we set a new all-time high. Less than half what Bitcoin's currently valued at, and ultimately, I believe, less than triple what Bitcoin will be worth here in just a few months, if not more. So to grow the stack, as usual, I'm going to use the Cash App. Cash App is not a sponsor of the show. This, again, is a you do you thing. I was asked at a Bitcoin meetup a couple weeks ago what exchange I recommend, what exchange they should use to buy their first Bitcoin. And I told them, this doesn't really matter as long as you pick a reputable exchange that fits your needs. And everybody's needs vary a little bit. I chose Cash App because we're only stacking $20. So they have a slightly higher purchase fee than a lot of services do. But they will let me transfer money to Cash App immediately, spend that money on Bitcoin immediately, and transfer it to my hardware wallet immediately. Whereas when I use Coinbase, depending on how I transfer the money, it can take up to a week to get there. Or if they credit the money right away, they might let me buy the Bitcoin, but they're not going to let me move the Bitcoin to my hardware wallet until the money that I sent them is settled and they're really super sure that it's really going to be there. And that's usually about 2 weeks, about 5 to 10 working days. And then when I move it to my hardware wallet, they charge me a mining fee. And while the current mining fee is only about 63 cents or whatever it was, they always charge like $5. They way overestimate what the mining fee is going to be. Cash App isn't going to charge me a mining fee. So despite the fact we're going to pay about 45 cents in fees to make this $20 transaction, which is technically a higher percentage than we would pay at Cash App, we're not going to pay a mining fee. So it comes out in the wash. Again, they're not a sponsor of the show, and I use multiple services when I do purchase Bitcoin. I just happen to love Cash App. And if we're stacking small amounts, I think it's just the easiest way to stack. So again, I'm not endorsing them for you. This is a you do you thing. They're not a sponsor of the show. They might not even be available where you're at because they're primarily a US company. But if you're one of the 50% of people listening in the United States and you want to use Cash App, there is a referral code in the show notes. What you get for using that referral code when you sign up varies from time to time. So whenever you listen to this podcast, I can't guarantee what that's going to be, but you'll get something that you wouldn't normally get. Usually it's like $5 or $10, and the podcast gets something as well. So you can help support the podcast, get paid to do it. And it's something you wouldn't get if you don't use the referral code. Again, they're not a sponsor. If you sign up for Cash App, you'll get your own referral code to give friends and family. I just like Cash App, and I like the fact that I think Jack Dorsey's I know he's a billionaire, but he gets it. He gets Bitcoin. He gets open source software. He gets freedom tech. All right. So I have Cash App open. I don't actually have any money on Cash App this week because I made some purchases this afternoon. So I'm transferring from my debit card because I have a debit card linked. Boom. I mean, it's there. It's that fast. I got $20 in Cash App. So it's just a matter of tapping Bitcoin, tapping buy, entering $20. Tapping confirm, and boom, just like that, we've purchased an extra 22,604 Satoshis. And that is going to bring our stack up to 10,501,500 Satoshis, currently worth about $9,082.64. And that is not too shabby considering now we've converted just 3,820 US dollars into that Bitcoin. So obviously we've done quite well, and things are just getting started. Most importantly, we have more than a tenth of a Bitcoin. We're rolling on to 0.10. We got 0.1050150 Bitcoin, 10,501,000 Sats, and I intend to keep growing that stack as long as there are people out there willing to trade Satoshis for fiat that the Federal Reserve just prints by pushing a button. So because this is about dollar cost averaging, that has raised our average purchase price by about another $112.40. So our new average cost basis is $36,375.76. Still not too shabby, considering that's less than half the current US dollar price of Bitcoin. And when Bitcoin goes on to retake that $100,000 mark, and that could be while I'm yapping, that could be, who knows when that's going to happen, but it will happen sooner rather than later, because I don't think we're anywhere near the end or even the midpoint of this Bitcoin bull run, at least all-time high-wise. When Bitcoin does return to 100,000 US dollars, this stack, without adding a single extra Satoshi, will have a US dollar value of $10,501.50. When not if, but when Bitcoin hits that $1 million mark, and plebs, that's only it matching the market cap of gold. So when Bitcoin surpasses gold, when Bitcoin eclipses gold, which it surely will do as technology tends to eclipse and swallow everything that it comes after, and Bitcoin is just so much better than gold in so many ways. So when it does, this stack, without adding a single extra Satoshi, will have a US dollar value of $105,015. And if Adam Back's $10 million Bitcoin prediction comes true, and of course, I believe it will come true, just a matter of when. Maybe it won't happen for a couple cycles. Maybe it happens this cycle. Again, nobody has a crystal ball, but when Bitcoin does hit $10 million, this stack of Satoshis will have a value of $1,050,150 US dollars. Now talking pie in the sky here. Remember back in January 2022, Fidelity Investments Director of Global Macro, Jurian Timmer, said that Fidelity believes that one Bitcoin will be worth $1 billion, $1 billion with a B, by the year 2038. Plebs, that isn't that far. I mean, that's 13 years from now. When that happens, whether that's in 2038 or 2050, at some point in time, it's inevitable that if we see hyper-Bitcoinization, Bitcoin will eclipse 1 billion. So when it does hit that $1 billion mark, this stack will have an astounding US dollar equivalent value of 105,015,000 US dollars. That would certainly put you in the category of those early adopters, the ones you saw all the stories about the 15-year-old who took the $1,000 his grandma gave him, put it into Bitcoin, and 10 years later he's worth $100 million. Boom. There you are. You took the $20 a week you'd been investing for the last 4 years. 10 years later, whatever the case may be, 2021 to 2038. So 17 years later, you're worth $105 million and 15 cents. And people will call you lucky. People will say you didn't earn it. And that is because you get Bitcoin at the price you deserve. And the naysayers, some of them, when they eventually do come to Bitcoin, will come in a lot higher than it is now. Either way, even at its current value, that's not too shabby. Not too shabby considering we've now converted 3,820 US dollars, and we did so stacking just $20 a week. Just one $20 bill converted into Satoshis every week. As usual, before I wrap up, I would like to ask you to help support this podcast by sharing this episode, by rating or reviewing this episode, by rating or reviewing this podcast. Of course, where you're listening has different ways to do so, but if you're listening on Apple Podcasts, for example, one thing you can do is to make sure that Apple has not disabled your automatic downloads. They, remember, a while back, a year or so ago now, they started disabling automatic downloads for any podcast if you hadn't listened to at least 2 episodes in the past week. Since I usually only put out 1 episode a week, that means we won't ever hit that threshold. So if they disable your automatic downloads, you might not even get notifications that there is a new podcast. If you found this podcast by accident on Apple Podcasts, that might be why. So please check to make sure you have automatic downloads enabled. That also helps feed that algorithm monster. And you can feed that algorithm monster by following us on Twitter or X, where we are at BTC Bulletin Pod. Of course, I love to hear from you, and my DMs are open, and I do respond to my DMs. So again, on Twitter/X, we are at BTC Bulletin Pod. If you don't use Twitter, if you're a little more old-fashioned, you can always send us a good old-fashioned email. My email is bitcoinbulletin@protonmail.com. Again, that is bitcoinbulletin@protonmail.com. So don't forget to join us next Wednesday as we grow our stack together, as we continue this DCA experiment, as we continue to stack 20 US dollars worth of Satoshis every week until there are just no more sats for sale, or at least not for sale for fiat. But either way, don't forget to keep on stacking those sats, you sexy sat stackers.